All right. What's up, guys? Welcome back. Today I'm going to be breaking down some of my recent tweets, my thought process, where my head's at now. We'll also be doing a market update, giving some updated, fresh thoughts and opinions on the markets, talking about all the assets I know you guys really care about, and even some that I know that you guys don't care about, but I'll tell you why you should. I'll also be mixing in there some of my personal experience of what it's been like recently to share my thoughts and opinions on Twitter, on YouTube, Instagram, Discord, all that good stuff. So for anybody that follows my work or my thoughts, whatever you want to call it, just know I really appreciate you guys. I really appreciate the support. I appreciate the questions. You guys do me a big favor in, you know, challenging my ideas. Whether you're asking a question or you think that I'm wrong on something, I welcome all of it because it really helps to reinforce what I know, and I can find holes in what I may not know so well, so thoroughly as I think that I do. So just wanted to let you guys know that I appreciate you. This video is for you. I'm going to do my best to, by the end of it, I want to be able to have provided some value that you're going to be able to walk away and you're going to be better than you were before you clicked on this video. So with all that out of the way, I also want to preface by saying I like to do my videos just raw and uncut. It's easier for me. I don't really know how to edit. I started doing this mainly for myself as a way to journal, hold myself accountable. And then it kind of just turned into, oh wow, like I'm helping people, getting cool opportunities from this. Um, so yeah, I really want to provide value to you guys, but I also want to, you know, do it my way. Another thing is I don't have the greatest mic in the world, so if you hear me walking around, sitting back down, you hear my chair, uh, things like that, just bear with me. I already ordered a new mic, so future videos they'll have really good quality. So with all of that out of the way, we can move on to the first topic. So, before I even start talking about my thoughts or opinions and stuff like that, really we have to understand the seasonal tendency charts. And this has been a point of contention for a lot of people, even despite my best efforts to convey the information bite-sized. It's just that it's a little bit more complex. It requires a video. I have to kind of talk about it. So first things first, I really want to catch you guys up to speed with how to use these seasonal tendency charts. So let's go ahead and do that now. All right. So what we have here, I know there's a lot of stuff going on. All I want you to pay attention to is this chart here. You don't need to care about the numbers, but pay close attention to that this is a chart of a full year, month to month. We're looking at a seasonal tendency yearly chart of NASDAQ. Okay, so just kind of let's get all the boring stuff out of the way, right? So have the purple line, that's the 10-year line, got the 5-year line in blue, 2-year line in green, right? Current month, we're in September, and current day is the red line. Now, the way that I would explain seasonal tendency charts, and then I'll also kind of share with you guys how it was taught to me. Um, I like to look at it as if I told you that for the past 10 years, Bitcoin has been green during the month of August. When you're trading, and you know that, you're going to have an extra edge because you know that most of the time, this is what happens during this month. And you can say whatever you want about it, but this is not conjecture. This is not, oh, I think this. This is a real statistical data point, right? Now, the way that I was taught to think about it is think about the weather cycles in your area. How likely is it that it's going to snow in your area right now? For me, I live in Texas, so it is very, very unlikely that it's going to snow right now. It's hot, um, very dry heat. So I don't expect it to, I don't expect snow. I don't expect a lot of rain. Uh, Doesn't mean that it can't happen. It's just most of the time, I've lived here for a while, that's not what's happening, right? So, let's say you live in New York, the it's very high probability that in December you're going to receive a lot of snow, right? I lived there for a couple years, and I mean it's can start snowing as early as freaking September, August even sometimes. So you want to think about the assets as the different places and the weather cycles as bullish or bearishness. Now, once again, this is not a set in stone thing. Just because price goes down for like let's say for this month, usually price is moving down, doesn't mean that it has to, right? Which clearly we've seen. Now, you also don't have to make it more complicated than it is. When I look at these charts, I'll look at the green line and I'll say, did did the green line go up for this month? Yes or no? If the answer is yes, or let's say October, for example, October is typically bullish. So when October comes, am I going to be thinking, oh, let's go for shorts? No. I'm starting to build a picture, right? The seasonal tendency chart is not the whole picture. Any sort of strategy that you use, if you only are using one factor, it's not going to be good. And it's just lazy. So if you're only using a moving average, for example, that's not very good. You should compound multiple types of confluences to make that thesis stronger, right? And that's what I teach my students. I teach them how to build a thesis that's rooted in logic to give them the highest probability trade setups, right? So, like I said, don't make it more complicated than it needs to be. Now, let's talk about specifically why I've been using the NASDAQ chart. Why haven't I been using the S&P 500 chart? Why haven't I been using the Bitcoin seasonal tendency chart? I really like using the NASDAQ because it's extremely liquid, definitely more liquid than Bitcoin. Um, and because of that, we find more reliability in the assets that have more liquidity. Um, they move a lot cleaner. They move a lot more in line with expectations of how it should move, right? Now, it doesn't mean that as you go down in liquidity, now it's unreliable. It just means it becomes less reliable. So again, Nasdaq super tech heavy. So the correlation between the S&P 500, the Nasdaq, and Bitcoin are very high. And if you don't know this, if Bitcoin is going down hard, the likelihood that all altcoins are also going down very hard is very, very likely. These are correlated markets. And even if you want to say to me that, oh, Bitcoin is a risk off asset, it's like gold, that could be what it's intended for. But I promise you that if you put a NASDAQ chart and a Bitcoin chart together, which we can do in a little bit, you're going to see that they are very closely correlated. And we like to work with correlated assets. They give us a lot of clues. So that's why I've been using the NASDAQ seasonal tendency chart to kind of follow what moves are going to happen on Bitcoin and Sol, right? And this month, for example, I was wrong, right? I really did think that we were going to get a nice little pullback. Price has been so aggressive to the upside that I did think that we were going to get some pullback. I saw some early signs. I took them prematurely. That's on me. I lost on the one setup that I had posted on Twitter, but I did not lose any more after that. Now, if you want to count me stabling a lot of my Solana before this recent move up as a loss, fine. But me personally, I can never see it that way. Taking profits for me, I will never look at that as a loss. Just can't do it. Not a good habit to build. So, looking back, right, at the other times that I've used this, if you scroll back on my tweets, and yes, I know that there's a lot of them, but if you need the social proof for yourself to be confident in this, and you're too lazy to go investigate it yourself, which is what you should really do, because if you investigate it and you see what I'm telling you is true, you're going to be way more excited about it and you're going to be a lot more involved, right? You're going to believe it more. I don't expect you guys to believe anything because the random dude on the internet, the one of a million, uh, is telling you that, hey, this is true. I've made a lot of money with it. I've made a lot of money publicly with it. The people in my groups, they know that. The people on Twitter that have been following me, they also know that. I don't have anything to prove on that front. But, like I said, you investigate it yourself. The retention and your desire to actually implement this is going to be much different. So I implore you guys to check it out. This is the website that I use. ICT, the person that kind of put me onto this, the first person to talk about it, I think, was Larry Williams. But ICT, I think he goes into a lot more depth, gives a lot more practical advice on how to use it. He really likes to use Steve Moore's seasonal tendency charts, which you do have to pay for. Personally, I don't really want to pay for it. Uh, I like this one. I like the chart. I like the things that these guys have done with it. I don't get paid by these guys or anything like that. I use it because I've made money using it, and I've seen that it works for me personally. So, hopefully that kind of gives you guys some insights into how the seasonal tendency charts work. And even though I was wrong this month, I was not wrong in January, February, March, April, May, June, July, and August. And that's not to pat myself on the back or anything like that. It's merely to show you, hey, everybody's wrong sometimes, and I'm okay with being wrong. I care way more about being profitable than I care about being wrong or right. And that will make a really big difference if you can implement that into your own trading. But topic for another day. So, like I said, I pretty much almost called the exact bottom on Solana. Using the seasonal tendency charts, I called the bottom on equities, or not equities, sorry, indices, and you know, a lot of assets that a lot of these guys trade. You know, the way that I've established myself in this space is by sharing my thoughts and opinions and them being right most of the time. Not all the time, but most of the time. So let's talk about this month, right? Let's go ahead and open up a chart, okay? And let's look at Solana. Now, this is a super crazy chart, right? And let's kind of map out the beginning of September when I first started telling people, hey, I really think that you should risk off. Definitely stable a little bit. It's not a bad time to take profits. Uh, Clearly, those people might be upset at me, but and there's a couple people in the DMs, but I pay them little mind because what does it matter to me if I miss this move when I caught this move and this move? Matters to me very little, okay? So even though I got it wrong, I can still actually get a very important piece of information about what's going on right now. Now, if I show you the NASDAQ chart as well, you can see that since the beginning of September, we've been on the move up, right? So the seasonal tendencies chart was wrong. Must mean that it doesn't work, right? Not at all. So let's talk a little bit about what kind of information can we extrapolate when seasonal tendencies don't pan out the way that we think that they should, right? When we have a month that's predisposed to be bearish because of seasonal tendency and it's not, you typically will see a violent rip in the opposite direction, not only for that month, but the months thereafter. So, for example, May was supposed to be bearish, but this is one that I was a little bit more privy to, specifically because of how hard we moved to the downside. I anticipated that May would not be bearish, and I also didn't see anything on the charts that told me it would be bearish. And that was the mistake that I made this time. I didn't see true confirmation structure-wise that we were going to be moving lower. And because of that, yeah, it definitely cost me an opportunity to still be holding a lot of SOL, and it also costed me a loss on the timeline, right? But nevertheless, my high time frame, my macro high time frame bias has been bullish since end of March, essentially, right? And as you guys can see, um, once March was kind of ending, or sorry, not the end of March, but towards the end of April is when I started to get really bullish. Um, I was able to call the bottom on a lot of different assets, a lot of important assets, right? Now, let's kind of start segueing into the other asset classes. Why should you pay attention to, say, the dollar, for example, right? Looking at the dollar right now, with the concepts that I use, we look like we're going lower. And here's the thing about the dollar. If you can incorporate this into your high time frame analysis, watch what it does to your win rate. If the dollar uh, is supposed to be moving lower, then that's an inversely correlated asset with risk on assets. Risk on assets can be stocks, tech stocks, crypto, certain commodities like oil. So they kind of have an inverse, right? When people get really scared, like for example, if there was a war to be announced right now, you're going to see a lot of people flooding into gold, back into the dollar, because that's what people typically do in an environment where, hey, I should probably stable up. I should probably put my money somewhere safer than in assets that are risky, right? So with that being said, try incorporating the dollar into your analysis because the dollar is one of the things that will move before the assets that you guys actually look at. This is one of the things that I've used to really call tops and bottoms. It is one of the things that has gotten me really established in the space. And I love it because it opens a lot of opportunities and doors, and I want the same thing for all of you guys. So another one that we'll look at, and this one is you're getting a little bit deep in the rabbit hole here, but looking at bonds, bonds have an inverse correlation with the